Good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is October 31st. Happy Halloween to you all. Sorry, no Halloween spoofs today, but it's Monday, and we're just going to jump right into it. We got just really one economic news release scheduled for today, and that's Chicago PMI. That is the manufacturing in the Chicago region. The previous month, back in to uh, September, it was 60.4. We figured it would drop down at to 58.4, and actually expectations came in, forecast came in perfect. So it did dip a bit in Chicago, the factories. Obviously, we need factory or housing to stimulate the economy, and right now that dipped a bit. So that's not great news on the economic front. So the rest of the news we have today will be actually on the fundamentals on the headline news. So let's go ahead and take a look. Right now we have the stock market's down quite a bit. The Dow at last review is down about 180, and so part of that is the MF Global files BK. What that was is they kind of invested a lot in sovereign debt, and of course they just kind of folded. So that's going to have a ripple effect because there's a lot of large corporations that did invest in MF Global and relied on them to acquire these debt out there. So a lot of the bonds. So this could also affect the bond market and interest rates as well at some point. So let's go ahead and take a look here as well. Japan also sold some of their yen on the market, which lowered the value of the yen, which helps everybody out a little bit as well. And then investors, their enthusiasm last week in regards to the Euro's resolve kind of dissipated a little bit. They do kind of realize that there's still a lot more to come, and Greece was just the tip of the iceberg, and that's just going to be just the beginning. So there's going to be a lot more to come ahead. So as we kind of said, hold your enthusiasm last week, and sure enough, now they're kind of picking up their bootstraps and kind of taking a look at it a little bit further. So be prepared. And so let's kind of jump over to the bond market and see where interest rates are at. As we can see, we had a decent day on Friday, and we did close above the 10-day moving average. But today we have a huge opening gap here, which above all this ceiling, which becomes resistance for us. We have opened up, and we're actually having another rally going on here today. So it's a nice day today. My concern is at some point this will eventually close. It could be later today, it could be tomorrow, could be any time, but for this to be able to continue going upwards, this will need to close at some point to sustain the movement upwards. So that's my concern here, is that it could be tomorrow. So if you're short term, need to get good rates, I would lock in today and move forward. But interest rates are better today. But for short term, I would definitely lock in. If you're long term, you can kind of hold on a little bit. But again, I would kind of definitely try to lock in if possible. All right, folks, stay tuned to my, so know this interest rates are a little bit better today, and stay tuned to my little offer for you.